Hello, Investing Plus with you again. It's been a little while since I made a video. If you hear a bunch of banging in the background, we've got some guys here at the house installing windows, so sorry. Anyway, quick update on the portfolio. I'm decisively beating the SPY at this point, up about more than 16% for the year. So far, so good. Here's a list of my current holdings. I've added Apple to the portfolio. There's a conflict among market prognosticators as to whether we're going into hyperinflation or back into deflation and low interest rates. The fact that the U.S. Treasury yields have stayed stubbornly low tilts my opinion toward the view that interest rates will stay quite low for a long time, and this inflation scare will probably subside. If this is true, the situation would favor tech stocks, and Apple is the king of the tech stocks. Apple's basically been flat for almost a year, so I figure it's time to get into a bullish position. I'm trading the poor man's covered call on Apple. My long call is a 115 strike expiring on October 15th, 4 months from now. I only paid about $1.50 of intrinsic value for this call. And I can make that back after selling a single weekly covered call. So as long as Apple cooperates, that should be a good position. So I was flying back to Denver from Florida this weekend, and the Lyft driver was a nice young guy who had dabbled in trading. He gave me a couple of his favorite stocks, one of which is Sunrun, which is a solar panel company. No offense to the guy, but you know what they say. When the taxi driver starts recommending stocks, it's time to sell. So I'm trading a poor man's covered put on Sunrun. Sunrun, a year ago, so last June, it was trading at about $14 a share. It went up to $95 a share in January. So at the current share price of 43, we're still 4 times higher than we were a year ago. And this is for a company that has been in business for 15 years and has consistently lost money. I'm just saying. Anyway, since it peaked in January, it's been trending downward, and it recently hit a death cross where the 50-day moving average, which is the little red curve, drops below the 200-day moving average, which is the green curve. I'm sorry, that's backward. 50-day is the green, 200 days is the red. I bought the 60 strike put expiring on October 19th, November 19th, so 5 months from now. This long put is 40% out of the money, so it should be safe unless Sunrun goes up by 40%. I sold, unfortunately Sunrun only has monthly options, so I usually like to trade weeklies, but monthlies are fine. I sold the July 16th 40 strike put for $1.80. or about 4.2% of the stock price. Over the next month, Sunrun can fall by 7% before my short put is in the money, and it can fall a total of 11% before the position goes negative. So anyway, lately Sunrun has been butting up against its upper resistance, so we'll see if that reverses and it continues dropping, or if it's going to move against my bearish position. But anyway, it's good to have a few bearish positions, even though the bulk of the market is trending upward. So anyway, let me know what you think in the comments. If I don't hear from you, then I'll see you in the next video. Thanks.